Welcome to the Metals 100 coverage for the PDAC 2024 in Toronto, Canada. So we have silver stock investor Peter Krauth here with us today. How are you doing, Peter?
I'm doing fine. Thanks for having me.
Yes, maybe we could just start off by talking about some of the macro situation here.
Sure.
So we have the interest rate and inflation are battling each other. I've heard that will probably be a better time for that interest rate to stop hiking this year. And then I've heard a lot of talks about the possible recessions along with this. So what's your thoughts on those sort of macro environment affecting the commodity market in general?
So there's been talk lately that that rates may actually take longer to start cutting than was earlier thought. So central banks may delay those cuts. I did hear recently that it's more likely sooner, perhaps, for the European Central Bank. But if everyone watches the Fed, that's usually the kind of bigger indicator. And it seems like the thinking right now is that the Fed may start cutting rates, but only later. A lot of the data that's coming in is that inflation is really not gone, is really very sticky, staying high, and that because of that, because they're data dependent, that they may actually start cutting. First thought, and I was surprised by that, some people were thinking it was going to be as early as March or May. I had always thought it was going to be not before the middle of the year, and I still think there's some chance of that. But it's sounding like it may actually only start even a little bit later, that perhaps only as early as the third quarter. So that's certainly a challenge for commodities and resources, because higher rates keeps the dollar higher. Resources are priced in the dollar, and so a stronger dollar typically translates into lower resource prices. And so with the prices lower, that certainly isn't helpful for the companies that produce or look for the resources either. So it is a challenging environment. But we did see just this last Friday, gold closed at a new all-time high. So there are some rays of hope.
Yes, Peter. So we talk about interest rates. So even with such a high interest rate currently, whereas gold is trading quite high, all-time high. And so you're focused on silver. So how come silver is not performing as well? When do you think silver will catch up to gold?
So this has been a question a lot, actually, for the past year or couple of years. Silver has moved sideways for almost as long as 3 years. And I've been, of course, myself trying to figure out what's been holding the silver price down, especially in this kind of environment. Usually it follows gold more closely. And you're right, gold has been very strong. The miners have not been strong. And I think the disconnect between gold and the miners really comes down to that the buying has been driven a lot by central bank buying. And then if you look at the last 2 years in gold, we've been over 1,000 tons per year of gold going just to central banks. I actually did some quick research and math and figured out that you've got about 4,700 tons of gold produced every year. And central banks bought 1,000 tons of those 4,700 tons in the last 2 years. So that means that each of the last 2 years, more than 1 out of every 5 ounces of gold was actually bought by a central bank. That's just tremendous, pressure, upward pressure on the price, because it's been such sustained buying. Again, as I say, silver tends to follow. Normally, it tends to follow gold. And yet the silver price has gone sideways when gold has been up and strong, and the headwinds of high interest rates. So what I believe is going on in silver is that, and we could get into this in a little bit more detail, but silver's been a structural deficit for the last 4 years. Very deep shortages in the silver supply, and yet silver has gone sideways. We haven't seen the reaction, but there's something that I call secondary supplies in silver. And when silver is not consumed for industry by solar panel manufacturers, for example, or for electronics, and when it's not bought by investors in the form of coins and bars, you have silver, this extra silver that's produced every year, or has been produced in prior years, has typically gone into the futures exchanges and into places like silver ETFs. So that's where a lot of these sort of 1,000-ounce bars accumulate and pile up. And in the last 3 to 4 years, the futures exchanges and the ETFs have steadily seen their silver inventories being drawn down. Overall, the inventories have come down about 30 to 40%, which is pretty substantial considering they have, billions of ounces. And there's something called registered silver at the futures exchanges. And it's only the registered silver that's actually available for delivery. So here's what I think is happening. You've got large consumers, typically industrial users of silver, are buying long futures contracts, are buying silver ETFs that are backed by silver. And then in the futures contracts, they're standing for delivery, waiting for their contract to mature and then saying to the exchange, okay, now it's time for you to deliver my silver to me. By the same token with the ETFs, if you own enough of a given ETF and that ETF is backed by silver, you can turn around and tell the issuer of the units of the ETF, okay, now I'd like to actually take delivery of my silver. So I think that's what's been happening for 3 years. That's been drawing down on these excess inventories. And I think that can really only go on for so long. And when these inventories get drained completely, and someone goes to the exchange and says, I have this long contract, I want to take delivery, and the exchange says, we have no more silver left, we're going to have to pay you in cash instead. I think that's when the sparks are going to start flying and people are going to wake up and realize we've actually really, practically, in a practical sense, run out of silver. And it's not that silver cannot run before that for multiple reasons. If you get some kind of a crisis, a banking crisis again, a black swan event, I think that with rate cuts, silver will follow gold. It always does with a lag. But something like that will really trigger a huge spike.
So we just talk about more on the demand side. So how about supplies? I personally seen a lot more, I would say, risk involved in some of the silver producing countries like Mexico or Peru.
Sure.
Do you see more of that happening? Are these places becoming not as mining friendly as before, a potential disruption to the supplies of silver?
Absolutely. There's right now there's an ongoing issue that needs to be resolved with Mexico. There were laws that were passed by the existing government that would make it difficult for miners to have claims, to keep the claims in good standing, that would have to make large deposits if they want to, even just to explore something, especially if they wanted to build something, large deposits in advance, cash deposits, so that there is some sort of a security in terms of ultimately when the mine would eventually close down for reclamation and all these sorts of things. Now, there's been talk, it's apparently not officially in the law, but there's been talk of banning open pit mining in Mexico. I'm told it's not officially in the law, but the president has said that he would ban open pit mining. He's due for the end of his term anyways. There's going to be an election in a few months. He'll be replaced. Will the new leader be any better or different or more favorable to mining? Hard to say. If it's someone from his own party, probably not. If it's someone from the opposing party, perhaps yes. But the individual states, Mexico depends a lot on mining. It's very important for its economy, and that's been the case for hundreds of years. And you can't ignore the fact that the governors of some of the individual states that are very dependent on mining will have a lot to say, and there'll be a lot of pushback. So even if some of these laws, and probably some of them should be passed, environmental laws and so on, to make sure that mining is done responsibly. But by and large, a lot of what's there that is perhaps deemed relatively unfair may not pass at all. And some of the rest may actually get watered down considerably by the time that's all said and done.
So as the name of your newsletter goes, Silver and Stock Investor, I probably won't let you go unless you give us your silver stock pick here. Maybe a couple.
Okay.
One on the larger side and one on the junior side.
Sure. So on the larger side, I like quite a bit a company called Aya Gold and Silver. That's AYA. They operate exclusively in Morocco, actually. And in the last couple of decades, the Moroccan government has moved to privatize a lot of its mining. It was most of it was state-run prior to that. And they've rewritten their mining laws as well and have become a lot more friendly to mining. So Aya is one of the largest pure gold producers. It's actually a rarity in the space. Most mining companies that mine silver will mine other metals along with it, gold, base metals, and so on. So, and Aya is doing something that's also quite impressive, right in the middle of a mine expansion, a large expansion, in fact. They're going to go from producing almost 2 million ounces a year of silver to 8 million ounces a year. So they're going to quadruple production. And that expansion is close to done, I think over 80% done. So in the next several months, we'll see that start to ramp up, and commercial production is probably going to be there by the end of this year. I should say full-scale expansion should be by the end of this year or early next year. And on the smaller side, a company that I like, actually in Mexico, although they will not be, they don't have to worry about open pit mining, is a company called Sierra Madre Gold and Silver. So they have a couple of exploration projects that have ounces, but they've recently bought a mine called La Guitarra. If memory serves me right, it was held by First Majestic Silver. And they're looking at bringing this back into production. And their chief operating officer actually used to run that mine, so he knows it inside out. They have years and years of data on prior production in terms of costs, in terms of logistics. And they feel that they can bring this back into production probably within a year. That mine already has about almost 50 million ounces of silver equivalent in the ground. So that's a stock that I'm really quite excited about. I think that that's going to be a very interesting story. They can be cash flowing very quickly. And again, that's a bit of a rarity in the junior space.
So thank you, Peter, for sharing your insights with us here today.
It's been my pleasure. Thank you so much.
Yes, thank you for your time.